I am Nick Hodge, the publisher of Digest Publishing, and I'm sitting down with my co-founder of Digest Publishing, friend, colleague, and editor of Junior Resource Monthly, Gerardo Del Real. Gerardo, how are you?
I am well. Thank you for having me. I'm excited. We have a market, sir.
We do have a market, and that's why you and I are talking. Folks are noticing that market. Investors who are new to the resource and precious metal market are noticing that, and they're coming in. And we're getting questions about how to operate and manage capital in this not newfound gold market, but in this ongoing gold and precious metals bull market. So that's what I want to talk to you about. Gold just hit 4,000. Silver put in its all-time high monthly close at the end of September, and we're marching headlong into more rate cuts. You are a junior resource stock picker. Your publication is called Junior Resource Monthly, among other publications that you write. And I wanted to talk to you about one facet of the junior mining world, and that is jurisdictions. So that means where you're operating. Can you talk to me about where jurisdiction fits into your investment selection criteria and why it matters?
No, look, I think, and pun intended, it's absolutely critical, Nick. I think it's going to be really easy in this bull market for people, in the words of Rick Rule, to mistake a bull market for brains. And I think jurisdiction is going to be the outlier that really is going to separate the wheat from the chaff, right? So let me give you an example. There's a premium being given right now to North American deposits, right? We're seeing the government here in the US take equity stakes in companies for everything from lithium to copper to magnets, rare earths, you name it. And I think that's going to continue. And so in this cycle, it's going to be absolutely imperative that people do their homework on jurisdiction, because the same way that we're being rewarded with the premium here in North America, I think there's other jurisdictions that are going to get riskier and are getting riskier by the day. And so, look, we're fortunate enough to have a bull market. Let's be thankful for that, but let's make the most of it and not get too cute by taking unnecessary risk. And there's a lot of unnecessary risk being taken in the markets right now. So I get excited for these markets because I think it really separates people doing their homework from people that are just on the boat, right?
Well, let people look over your shoulder for some of the homework that you've already done and got such good grades on. You mentioned jurisdictions that you thought were going to get more risky, and you mentioned one that is currently fetching a premium. Let's start with the ones you think are going to get most risky. Can you lay out one or two for me that you think are maybe not off limits, but that are tough to operate in?
I think knowing where in Mexico to operate. By the way, I love Mexico. My family's from Zacatecas, home to some of the richest silver mines, right? But you have to really know where in Mexico your project is. And what I mean by that is there's parts in northern Mexico. We have a position that's up almost 1,000%, and yet still only has a market cap of roughly $45 million with assays pending. And I couldn't be more excited. That specific company is in northern Mexico in a well-established producing district, right? A belt. So I love that part of Mexico, but there's parts of Mexico where I won't go visit anymore. There's parts in Mexico where I certainly wouldn't allocate capital. And so it's just so important and critical to do your homework and know the difference between a northern Mexico and maybe a Mexico on the coast, right, for certain projects. And so that's a jurisdiction to me that you have to know the difference between the two. There's parts of Colombia that are like that. There's parts in Colombia where it's a whole lot easier to do business than other parts. So those are two that I would caution. Make sure that you know where your money is going, because it's going to be really easy, especially in Mexico, on the silver side, for new companies to bring back old projects, recycled projects, as I like to call them, that have sexy grades and sexy mineralization. And if you don't know why those projects haven't been worked on for the past 5, 10, 15 years, that's a good way for your money to go to money heaven, again, to quote Rick.
And what about jurisdictions that you think are up and coming or that are safer to operate in? You already mentioned North America, but anything inside of North America that you think or that you see as attracting capital or that is becoming easier to explore in?
Several. I touched on North America. I'll be very specific in this case. And like always, I'm talking my book. I'm a biased shareholder here of this company, but Wisconsin. Wisconsin has for the longest time had one of America's most prospective VMS belts, right? And so rich in copper, rich in zinc, rich in gold. And it was off limits for decades on end because of political and community opposition. And so that is no longer the case. As of several years ago, the local populace and politicians decided that they were going to open it back up and reinstate, mining licenses and exploration licenses. And so, look, there's some companies that are operating. There's one company in particular that's got, first mover advantage, GreenLight Metals, right? And they were able to pick up some of the most prospective projects in Wisconsin. Again, rich in copper, rich in zinc, rich in gold. They just published some assays here about a week and a half, 2 weeks ago. Hit right off the bat, great grades, good widths, with assays pending, tight share structure, low market cap. I mean, it's all of the things that I'm looking for in this bull market. I was writing the monthly issue for Junior Resource Monthly this morning, and I'm actually taking profits in a lot of the companies that during a bear market we initiated. 1,000% gains, 400% gains, 300% gains. And I'm not taking profits on those companies because I don't think they can double or triple from today's levels. I'm taking profits because I want to make room for companies like a GreenLight that have a market cap that could give me, the 10-fold, 20-fold, 100-fold returns that I love to search for.
Yeah. So you mentioned VMS, volcanic massive sulfides. This is where a lot of large North American areas that are well known have provided many base metals like Flin Flon or the Abitibi. And of course, you can get some precious metals mixed in with them as well. So you said they just had some assays out recently. Can you lay out, what you're looking for with GreenLight for the next couple of months, and then maybe where people can follow you to stay in touch or learn more about the company?
No, definitely. Look, what I want to see is I want to see continued grade. I want to see mineralization that is not too deep. I want relatively shallow mineralization. I want a good commodity mix. Again, you mentioned that the VMS deposits tend to be copper and zinc and a good sprinkle of gold. So I actually think in this rising metals price environment, we're going to see a lot of companies that have stellar economics. And if you have a good commodity mix in your drill holes, that's going to really help further down the road when you start putting economics and you start getting a peek at how economic these potential deposits are going to be. So what do I want to see from GreenLight specifically? They have a flagship deposit that's being drilled right now. We're expecting more assays here soon. I want to see the continuity. I want to see the geometry of the deposit. Now, I'm not a geologist, I'll caution that, but we have several that you and I both have access to that we can call and ask to explain this stuff. So I like to talk to the people that are much smarter than I when it comes to that and heed their advice. What else do I want to see? They have several projects in their portfolio. I would love to see them take the two best ones and joint venture some of the other projects because it's a quality portfolio. They were fortunate enough and astute enough to put a team together that's got local ties, and they were able to put together this portfolio that a lot of junior companies, especially in this environment, would salivate for. And so can't kiss all the girls. They're not going to be able to drill everything on their own dime. So I would love to see them joint venture some of the other deposits, potential deposits and projects that another group can advance and retain some of that upside for us shareholders.
And if people like the way you frame these markets or want to follow you and your recommendation in GreenLight and other companies, where can they do that?
Look, I encourage everybody to go to digestpublishing.com. I write several publications. Junior Resource Monthly is one. Junior Resource Speculator is another. And then you and I manage and write a service for accredited investors that it's gone well. Subscribers are happy. We're happy that they're happy. We're happy for ourselves as well. So I think, again, I'm excited for this market. I think we're going to have a couple of years of runway. Things don't go straight up to the moon, folks. The homework still matters. And so we're going to keep working hard to try to bring that to you the right way.
Exactly right. Well, thanks for your time today, Gerardo. As this bull market in base and precious metals continues to unfold, we'll continue to check in on different ways that you can help people do their due diligence as they go about deploying capital and picking stocks in the junior resource market. Thanks.
Thank you for having me. Let's get it.